Dave, looking at this, I mean, it wasn't as though the banking side of things was, as rosy as people are now thinking it was before this happened.
Yeah, when you look at the latest filings, and so this is information really from the banks themselves on some of their unrealized losses, for example, right? So what we're looking at here, and this is, again, based on their latest filings, unrealized losses on securities available for sale. That's different from the other bits that they're sitting on. But essentially what we're looking at here, just to give you a sense, right? So the scope is 160 major U.S. banks. And why is it 160? So we've taken a look at banks with assets of more than $5 billion. And that sort of narrows your scope. Total losses, unrealized, again, unrealized as of the last filing of over $200 billion. Now, there's the reason why the latest filing is important, because since then, a couple of things have happened, right? The U.S. government coming in and guaranteeing and backstopping some of the funding stress. That's one. There's this massive move up in treasuries. That's number two. And so you look at the loss like this, might actually be not as big already. But it's a reminder of what happens when rates move up and the bonds that you're sitting on go the opposite way as far as value is concerned, right? So when you try and determine why do we see big moves in some names and not others, might have to do with the fact that some of them actually, when you look at, say, loss ratios, for example, unrealized loss to equity ratios are higher compared to others. Here's a list based on their own filings on what that actually looks like. Comerica is at 42%. Now, what do the big banks look like, for example? Just to give you a sense of scale, not so much as far as ratio, but absolute value is concerned. Citigroup's at the top, 40-something billion at about 19%. So, again, just to emphasize, over 200 billion unrealized losses, latest filings, and that number probably has changed, Rish, given the move that we've seen recently in treasuries, which obviously tends to benefit given a 100 basis point move in 2-year yields. Rish.